guys, welcome back to another week of Mortgage Matters in Minutes. I'm your host, Brent Rasmussen, and welcome to 2026. Yes, it's another new year here, and we are still bringing you content, obviously, to help educate you in regards to the mortgage industry, but also how the mortgage industry and the real estate industry can work together to understand how you, as a buyer or a seller, can really benefit yourself to get the best deal that you possibly can. So today, we spent a lot of time last year working with family members in buying property from each other, really buying our children or kids buying properties from their parents or their aunt and uncle, or keeping the house in the family. And why is that such a big phenomenon last year and the year before? Because affordability is very challenging. It's one of the highest unaffordable times to purchase a home. Not saying that is all bad moving forward, but it can be challenging for individuals with, certain income levels, or single individuals versus a couple or a married situation that has two incomes, and one income can make it very challenging. So today we're going to talk a little bit about that and what we saw happen this last year, and that we helped many clients work on what's called a for sale by owner, buying a house from their family. They've already agreed to the terms, the numbers, everything else like that, but how to make it work towards their benefit. So we're going to talk today about how parents can help in that transaction by either gifting them real money or giving them equity, meaning that they already own the house, they already own equity, how they can transfer that over into the buyer, meaning their family, their children, their kids, whatever the scenario may be, so that first-time home buyer can get a leg up and get into that house. I think the biggest thing people look at is, okay, it's hard to get in, but once you do get in, it snowballs and you gain equity much quicker than you used to be able to. Similar to the stock market, the earlier you start investing, the bigger return you're going to have over time because of reinvested dividends, and the market generally will continue to increase. So why has this been kind of a big phenomenon? As we talked about, affordability is challenging, and it's not just interest rates. It's also prices of home. It's property taxes here in the Omaha area, homeowners insurance in the Omaha area. And I know I see tons of posts talking about how interest rates used to be way worse. And this was a scenario back in the late 70s, early 80s. But if we look at all things equal, the same loans we did back then, we do today. We had debt to income requirements, meaning you could only afford so much with the income you make. And what we mean by affordability is that the cost of goods are getting more expensive and our income is not keeping up with that. So in order for individuals to purchase a house, they might need a much larger down payment to qualify, or they want to purchase a home with a cheaper value, but generally speaking, individuals are not finding those homes in normal condition that they want to purchase. So one of the things that we've seen happen a lot last year is parents stepping in to help either with a down payment gift or selling your house when you move up to your family. And while this takes that house away from the market for everyone to buy, it definitely helps the family obtain equity quicker and build net worth much higher, because we've talked about this before. Homeowners have a significantly higher net worth than individuals that rent. It's massive. And we've talked about this many times over. So let's get back to the kind of point here and talking about gifting. And there's a couple different kinds of gifts. Gifts have to be paper trailed. We have to show where the money comes from, whether you're depositing money into someone's account as a check or a wire transfer, or if you're just giving equity from the sale of the house, we must show that on paper at the final closing statement or ALTA statement there at the closing table. So those situations truly can help a first-time home buyer get into a property. And really what we're seeing is this being a much bigger common scenario that's coming up, is that individuals are getting money from their family to help them start their life by getting their first home so they can start to build their equity. Similar to parents and family members that have helped put a few $100s into an IRA or a college fund, starting that investment so that the children can benefit in 5, 10, 15, 20 years versus putting that decision down the road of 5, 10, 20 years of them purchasing a house, and prices continue to rise. So a gift is a great way of doing it, or having a conversation about how family can help. We would love to have that conversation with first-time buyers and family that want to sell their property or have money just to get their children started. I can share with you, we talk about it very often, that a single individual, it can be very challenging to afford a home on their own, where it used to be obviously much easier to afford a single house than it is today. And it's not because of interest rates. It's because of everything. And interest rates is one of those variables. But if you are a parent or a first-time home buyer, and if you had that conversation this holiday season on, hey, in 2026, I'm interested in obtaining property, let's see if your family is willing to help. I'm Brent Rasmussen, owner of Mortgage Specialists. I'd love to have a conversation with you anytime, 402-991-5153. And realtors out there as well, we would love to partner with you and any borrowers you have questions about in regards to this as well. But you can also check us out on our website at mtg-specialist.com. Have a great rest of your week, and we'll see you here next time. Mortgage Specialists. Driven, trusted, reliable.